It's indeed our pleasure to have you join us on News Hub today. And in case you just joined in, well, you're here at the right time. We want to talk about the nation's economy, which many people are worried about. Exiting, recession very early in the year, even before the end of the first quarter, has been predicted by let's say, the economic team, headed by the finance minister and, of course, the governor of the central bank, bringing to the fore the things that he knows how to do best. Was something very cheery for the people. However, the question still remains, how can our economy grow and get to the point that we know it can? Not because we have the numbers, but because we know the wherewithal, we have the wherewithal to do it. And so this morning we want to take a look at the state of Nigerian economy, entrenching strong regulatory framework. And we're bringing to the studios this morning people that should know best, because when you keep your money somewhere, some people must ensure that it is safe, regardless of which bank you are with. And so this morning we're talking to the Director, Special Insured Institutions Department of NDIC, JJ Etopediok. I hope I got that right.
Yeah.
I wanted to. So nice to have you on the program, sir.
Thank you very much, madam.
All right, so let's talk about the Nigerian economy generally. What's your overview of where we are as a nation?
The Nigerian economy is on track. We've exited the recession with the numbers that came out at the end of the last quarter of 2020. And when you look at the statistics coming out from the National Bureau of Statistics, there were some leading lights in terms of pharmaceutical, agri, telecoms, retail. Those are areas which we need to focus on to take us to where we should be. So we are on course.
Okay, that sounds very, very interesting to hear, even though some quarters would argue that line of position that we are on course rather. But then let's look at, of course, COVID-19 came and it plunged the economy into some very huge recession, which we did exit, though marginally, like the economists will say. But then you can also realize that it came with some huge effects, virtually, basically on the banking sector. The banking sector was one sector that was highly hit by COVID-19. We saw the rise in we call them NPLs, non-performing loans within the banking sector. But we did see some interventions from government in terms of increased moratorium for lenders and the rest of them. But then let's look at the banking sector holistically right now. How would you rather think that the banking sector had recovered from the effects, the impact of COVID-19, or would you also say we are on course still?
You see, at the height of the COVID-19, the supervisors, regulators all over the world had to put on their thinking cap. There was a lot of overtures to bank staff, to the bank operators, and to the bank customers for them to tweak the way they were doing things. As rightly indicated, the areas of oil and gas, tourism, aviation was badly hit. Yeah. So there was need to restructure those facilities. And there were a lot of intervention funds from both the sovereigns and the central bank. So taken together, these intervention funds with a lot of restructuring has helped the bank to crawl out of the hole, so to say. And as you could see, as I did indicate not too long ago, the statistics from MBS showed that the leading lights of agriculture, pharmaceutical, retail were really taking advantage of these restructuring efforts and the tweaking that was done to be able to take us to where we need to be. Let me also observe that COVID-19 impact is not limited to Nigeria. It's a global issue, especially with the collapse of the supply chain. There's a lot of hands-holding that had to be done for us to get to where we need to be.
All right, let's talk about the monetary policy of the country. For instance, the MPC rose and gave us statistics that most of them were retained, so to speak, the last time. For instance, the monetary policy rate, 11.5%. We hear also that the cash reserve ratio and liquidity ratio, 27.5%. All of these indices will determine how our economy would flow, especially for those who really deal with these numbers to get us to where we are. How comfortable are you with our policy, let's say monetary policy in the country, vis-a-vis the health of the banks, which will of course have an effect on those who bank with such organizations?
You see, at the monetary policy, the eyes are on critical statistics. Because when you look at the GDP, how do you derive it? It's a function of the consumption plus investment plus government expenditure minus export plus import. So the dominant variable in the GDP equation is consumption. The dominant variable is investment. So to that extent, when you are tweaking the interest rate and the tariffs, you have to make sure that you do it in such a way that you do not stifle consumption, you do not stifle investment. And that's exactly what has been happening while you see the retention of those rates. Because if you unnecessarily move it forward, it will affect the critical variables of consumption and investment, and everything will be thrown over the board.
Interesting. Let's narrow this down to your field of specialty, because you are from the NDIC and you are the insurance of the financial sectors, so to say. There have been fears of the safety of the Nigerian banks in some quarters. Just recently, let's say sometime toward the end of 2020, 42 microfinance banks were liquidated by the CBN. Of course, the NDIC did step in. How strong, how safe are the Nigerian banks as we speak?
The Nigerian banks, taking a holistic view, is doing very well. How do I mean? Even in the big economies of the world, you will have some laggards. In the Nigerian system, we've been able to comprehensively make sure that the banks are well monitored. As far back as 2012, we introduced what we call risk-based supervision methodology to look at the books of the banks in operations in Nigeria, the deposit money banks, the microfinance banks, and the PMBs. So the risk-based methodology gives us opportunity to look at the corporate governance of these institutions. It gives us opportunity to look at the asset quality of these institutions. And let me mention frontally that the critical success factor of banks in banking is the behavior of the asset quality. What that simply means, how are the loans doing? So you discover that a bank with a strong risk management culture will have good loans. If there are one or two hitches, the board, the risk management committee of the boards, can easily fine-tune what is giving the discomfort and bring those loans back to line. So taken together, at the end of the risk-based supervision, banks are categorized into 4 buckets. We call them the high-performing one, the low-risk bank, the moderate risk bank, those that have potentials of giving us headache tomorrow are categorized into above average and high risk. So with these well-thought-out logical ways of reviewing the activities of these institutions, both central bank and CBN have been able to keep them in check. For the 42 MFBs that were liquidated last year, you know, like every business, there'll be 1 or 2 mistakes here and there. So there's an extent you can protect those that are not ready to do things the way they should do. So the central bank had no option but to remove the license of those banks and hand them over to NDIC for orderly liquidation.
Mr. Etopidio, I want to ask a layman's question, because some people will be like, okay, let's get to the root of it. You've just told us that you have 4 categories of banks, those that don't give you any problem, those that are very healthy and everything. But an average person, customer, does not know which bank is a high-risk bank. And so you take your money to the bank and you feel like, I'm protected. I can't keep it at home because of the bad boys. But when I bring it to the bank, but they did not know that it's NDIC that would make the money safe for them. Can you explain to us how you deal with, perhaps, I'm not asking you for the names, the low-risk banks, and how you can ensure that you bank wisely as someone that's watching this time?
Let me also make this information available that deposit insurance is for small savers. For sophisticated savers like you that has 1 million and above, we expect you to be interested in the goings on in your banks. You should be able to look at the financials, their published accounts, and ask some questions. Having said that, since NDIC has been put together by the government, it is our duty to protect everybody. That's the reason when you get into any of the banks, you see a sticker there, insured by NDIC. That should give you confidence. If things are not going well with those institutions, I think you won't see those stickers on the doors of the banks.
So it's an assurance that whatever happens, your money is safe.
That's correct.
Okay, so bring us up to speed. The 42 microfinance banks that were liquidated in 2020, yes, what has happened to the customers and the customers' funds? How far have the NDIC gone in, what's the word now, in ensuring that the customers are taken care of?
You see, the NDIC has in place right now a new management team. And the focus of the new management team rests on 4 pillars: strengthening and deepening deposit insurance framework, strengthening and deepening financial and technical assistance to insured institutions, strengthening and deepening orderly bank liquidation, and collaborating with CBN in monetary policy to stabilize the financial system. So to that extent, the department charged with liquidation of the banks, as we speak, have completed what we call the closing exercise on the 42 banks. They have also gone ahead to put together what we call the deposit registers. So anytime from now, announcement is going to be made to the depositors of those closed institutions to come forward with their documents so that they can collect their money.
Oh, that's a cherry news to a lot of people watching this morning. Let's just take on the microfinance bank. I know that COVID-19 brought about a change in plan that the CBN had given directly towards recapitalization of the microfinance banks in the country. So now we hear that 2 things, perhaps 3. We hear now that MFB operating in rural, unbanked and underbanked areas shall meet the 35 million capital threshold by April 2020. So we're in April already, and also we know that there are other things contained in the release by the CBN. How do you see the recapitalization bid of the CBN towards ensuring that microfinance are able to perform to the optimum in their operating service?
The recapitalization has always been the buzzword for licensed institution. You recall that the quest for more capital for the MFBs was out even before the COVID-19. But CBN and NDIC, being caring supervisors, did not say do it immediately. So there was a tweaking of the timeline to run out the recapitalization arrangement. Apart from that, before this time, we used to have a one-size-fits-all unit MFB with capitalization of 20 million. But now that unit MFB has been tweaked into Tier 1, Tier 2. Unit Tier 1 are those MFBs operating in the urban centers with a capitalization of 200 million. For the rural MFBs, with capitalization of 50 million. For the state license, with capitalization of 1 billion. For the national license MFBs, with capitalization of 5 billion. So how does this turn out? There was a need to do a time series, so to say, so that this would be easy for the shareholders, for the owners of these institutions. So the first leg of the recapitalization has dated April 2021 as the first call-up date. The last call-up date is April 22nd, April 30th, 2022. So to that extent, when the final roll call is done, and from what we are seeing with reports from the examiners, all the shareholders are moving around, doing all they can to make sure that they cross the finishing line. So it's a move in the right direction, because at the end of the day, it's going to strengthen the institutions. They're going to have a heavy single obligor limit so that they can give more loans to the active customers who wants to do one thing or the other with themselves, rather than just sitting down waiting for government to give them jobs.
Unfortunately, a conversation I've had with a few players within the microfinance space, they seem not very comfortable right now meeting up with the recapitalization figures for the first tranche especially. Is there a possibility of maybe shifting the goalpost a little bit further? Because we can all see how much difficulty the economy is facing in terms of cash right now. And then having them to plow such huge sum, where would they get it from? This same economy? Is the NDIC and the CBN looking at the possibility of extending the timeline for the recapitalization? Is there a possibility?
See, the issue of extension does not arise. If your child is in school and the school runs 3 terms, and the child is back with the first term result, maybe not exactly what you expected, would you say that child is a failure? I think it's too early in the day to say that they won't be able to meet up, because the timeline is still drawn out till April 2020, 22.
Yeah, that sounds like a long time. But the fear is that if they don't meet up with their recapitalization position, what happens to them? We're going to have a large chunk of the microfinance bank maybe liquidated, or are we looking at the issue of merger and acquisition of microfinance banks? Is that a possibility? Is that a position?
I think it's good to be positive, because I can tell you from our interaction, they have an umbrella organization called National Association of Microfinance Banks. They're moving around the whole place, talking to investors, and also some of them trying to raise what we call debt capital to meet up with the deadline. It's too early in the day to be pessimistic. I think the way to look at it is to be positive.
Because I'm sure the most customers are worried at this point in time. Some, say for the clarifications that we give on platforms as ours, and which you as an authority, you just said it this morning, some people feel that some microfinance banks could fold up any moment soon. So they have no clear-cut idea how it actually works. So what do you tell the customer watching this morning who depends a lot on the microfinance bank to help them, the MSMEs, so to speak, especially the small entrepreneurs who depend on microfinance banks to get them very soft loans, perhaps the ones that will sustain their businesses?
I did indicate that any bank that is licensed by central bank and is operating profitably and sustainably, you will see the NDIC sticker there. So if any customer watching goes to his or her bank and it does not see such a sticker, then he should ask herself whether she's at the right place. But once that sticker is there, I don't think there's any cause for alarm. Okay,
JJ, let me just let you know that you talked about the Association of Microfinance Bank. We have Joda, yes, Kenny Joda. He is the chairman of the National Association of Microfinance Banks Lagos chapter with us via Zoom on the other side. Yes, Kenny, good morning, and so good to have you speak to us on the show this morning, Kenny. We have...
Good morning to you. How are you doing this morning?
We're very well, Kenny.
Taiwo, not Kenny.
Yeah. Oh, Taiwo. Oh, come on, keep calling him his brother's name. Can you imagine? Unfortunately, I know them both personally. Anyways, Taiwo, sorry about that. But then you have the regulator in the house here. You have JJ in the house this morning. You did listen to a few things that he talked about. I'm sure the recapitalization concerns is a huge one for players like you and the association going forward. Do you think that you are ready for this recap, looking at the deadline as given by the regulators? How ready are we?
Thank you very much. I think at the last count, we've seen quite a number of our members positioning to reach the Rubicon, the first pedestal of the capitalization. However, we've also interacted with quite a sizable number, over 60% of them, and we've taken feedbacks that we have shared with the regulators. And significant is the perception of the marketplace. A lot of interviews are being granted, a lot of information is out there, and there seems to be a bit of uncertainty around the customers. I hear JJ said that customers should go into a microfinance bank or a bank and check out for the sticker to see whether their funds are safe or not. But you see, issues like these in managing people's perspective or perception of what is happening in the market is a bit more fundamental than that, because a lot of things thrive on rumors. And what we have there in the market now that agitates a lot of mind is that, okay, shortly after the closure of about 42 MFBs, we're likely going to see another round of closure because of the capitalization that has been foisted on the microfinance banks. Why I think that capitalization is required, and I will take it with a lot of responsibility, because if you look at 2019, when we didn't have a pandemic, the CBN saw the need for recapitalization. In 2020, we had a pandemic, and a lot of microfinance institutions actually made losses, which further eroded their capital. And so they need to top up that capital. They need to even get back to where they were in 2019 before they start to build. And Mr. Itipiodoc has largely explained the significance of having adequate capital to run the business. However, timing is also critical. We've engaged a lot of investors, and we've also tried to do some debt capital raising to meet the requirement, especially for the fragile and small microfinance banks that are not able to meet those, that are not likely to meet the first round of capital raising by April. Because a lot of investors are requesting that they want to see how the economy will pan out during this pandemic. And so they're not bringing out money to start with. And then even other potential investors who had started opening discussion are waiting for the post-pandemic audited financials of most of the microfinance banks. So what you will have seen largely in 2020, 2021 is internally generated capital by existing shareholders to meet that deadline. The inflow of capital from external organization and external bodies to help shore up the capital has been slow in coming because everybody wants to wait out the pandemic. And I think that's where the rubber hits the road, and that's where the significant discussion should be around that. Are we likely to see a realistic growth in the capital of microfinance bank by April? I doubt that. And like I said, I'll just put it in 2 bullet points. Investors, and likely any astute businessman or investor, will be wary of putting money into any corporate entity at this moment without clearly understanding how the pandemic had affected that industry, and without waiting for the audited financials to make a move. The March deadline, a lot of microfinance bankers made the March deadline for submission of the audited financials to the regulators. But it's going to take a couple of weeks before the regulators get back to you and before you're allowed to share those documents with your investors. So that's on the one side. The second one is that most of the microfinance banks are worse off than they were in 2019 because of the loss recorded during the pandemic. Don't forget that microfinance banks serve the vulnerable sector of the Nigerian economy, and they're the worst hit, they're the worst affected by the pandemic. So you can't push the customers too hard. You need to be gentle with them. You need to guide them. You need to lead them on the path of recovery. And that affected a lot of income. That affected a lot of banks' profitability, especially the microfinance institution. And for these two reasons, I have my fear. And I think the regulators will need to do a lot more to see how the timing will help. The apprehension about April among the customers is real, because the customers are looking at April as the first level, and they are also asking microfinance institutions and banks questions. How well are you guys faring? What are you doing? And you might likely see a flight to safety if clear pronouncements are not made. The other bit of the challenge that we encounter, and that we're also engaging the regulators, and I think progress are being made, is how do you define if a unit microfinance bank in Ekiti, for example, wants to merge with another unit microfinance bank outside that local government. Because when it comes to mergers and acquisition, it's a marriage of convenience to start with. You have to look for like partners to want to. So it's about, even in the definition of microfinance bank, there is a need to come up with a framework that allows for mergers to go on seamlessly without an issue. If I have a unit microfinance bank in Ejiko, can I merge with a unit microfinance bank in Ikoyi? Can we try to choose the location we want to operate from? So those are the questions and and I think germane issues that we need to look around.
All right, Taiwo, I know that there is a lot you have to talk about, but we need to route the questions so that even our viewers can really understand. And of course, JJ can answer the questions in the studios. You took off the questions from my mouth, but I have to redirect so that you can give us more clarity before we come back to the studios. As even before COVID-19, there must have been challenges faced by the microfinance banks in Nigeria. You've mentioned two. What are those very heavy ones that you think that the regulators can help with so that we can continue to have a better economy in the country?
Liquidity is one of them. And when I say liquidity, it's available of funds to be able to lend to the customers. That was a major challenge we had. And it's still a current challenge, because even with the COVID-19, you see a lot of microfinance banks take their money out, depositors take their money out from microfinance banks. So liquidity is key. The second one is what, again, JJ has rightly mentioned, is on corporate governance. And what we have done about that at the National Association of Microfinance Bank level is to entrench what we call self-regulation by trying to also look at ourselves and ensure that things are done rightly and properly. And the regulators will agree that there's been a lot of effort into that, because there was initial fear that MDs of microfinance bank who have spent 10 years, the succession plan may not go on very smoothly. But now about 80% of those have been closed and successfully closed too, and very seamless. So I think the major one that we need to focus on is liquidity.
So very well said. Let's have JJ respond to a few of the concerns that you have raised. Very salient concerns that Taiwo just raised. But what I want to lay my hands on mostly is the one on liquidity, because I haven't looked at the operations of the microfinance, looking at the COVID-19 impact on the banks. Of course, there was a lot of withdrawals from the microfinance. Wouldn't you think that because of the role they also play in stabilizing the economy as the closest financiers to the grassroots, wouldn't you think that an intervention for that space could also be considered?
Thank you very much, and I also want to appreciate my friend Taiwo for the issues he raised. Taiwo is very much aware of the fact that at the NDIC Act 2006 as amended, Section 38 has provision for financial and technical support for MFBs, PMBs, even DMBs. But it comes with a caveat. Those institutions approaching the corporation for liquidities to financial assistance must have a positive capital adequacy. So if they are coming to the corporation for temporary liquidity support, the corporation is ready. But what has happened is that one or two institutions that approach the corporation's window did not satisfy that minimum requirement, because the corporation's fund is not to assist you to fund your capital. It's to help you to do your to assist you in your working capital to meet the liquidity needs. So having said that, a number of the institutions, I'm sure, are going back to the drawing board to see how they can put together a positive capital adequacy before coming back to the corporation. Taiwo also made a point that I cannot fault it. It is very critical that for every 100 cases of a bank running into trouble, the trouble usually is not with the liquidity. The problem is always with the governance structure, the board and management. So I'm happy that Taiwo has said they're working around that as an association to deal with that. He also raised the issue of lack of clarity on the majors of some institutions. You see, the catchword is you match apple with apple. If a unit MFB is somewhere in a rural area, the question of trying to fuse with a unit MFB in an urban center would not look too easy. So if a unit MFB in a particular location are talking to each other, because these are business decisions. Yeah. The supervisors will not force any bank to get into merger and acquisition. You take it as a business decision. So these are my comments.
One minute, Sharon.
All right.
Let's look at, you also raised the issue around the timeliness for the recapitalization. Of course, we're all aware that the conversation came about before COVID-19, so nobody saw COVID-19 coming. And then COVID-19 did come and, of course, changed the entire dynamics. Shouldn't there be a need, looking at the current dynamics, that there should be some form of extension for the recapitalization initiative, the timeline? Because, I mean, I've listened to it. We talked about 60%. 60% for me is not a good pass mark, looking at the importance of microfinance establishments in our economy. We can't allow the banks to go down. Of course, I'm sure the NDIC would not want to fold their hands and see the MFBs go down, or the DMBs. So it's important we begin to look at the issue of the recapitalization and the timeliness, the timing of this initiative.
You see, the 60% number by Taiwo, I don't know how comprehensive that is, because it is we at CBNDIC that should come out with those numbers. So the numbers are not as terrible as being put together. Having said that, you remember that at the height of the recapitalization, the first timeline was April 2021. But with a lot of discussion by the association and other stakeholders, the timeline was lengthened to April 2022. I think we are talking about more than 1 year as we speak. I don't think there's much to be worried about, because the operators of the MFBs, they are businessmen and women. They are not resting on their hours. If there's a will, there's a way. They are working hard on it. We are very confident that they'll do a lot of things before the end of that timeline of April 2022.
JJ, I hope so. I hope that they're as optimistic as you are, because if you want to take into consideration what Taiwo said earlier on, he says there are concerns around how possible mergers and acquisitions could go, bearing in mind the time frame and the effect of COVID-19 pandemic on their operations generally. Let me go back to Taiwo at this point in time. Taiwo, you said earlier on that if the worst comes to being and the deadline has to be kept to, and 2022 April will be the deadline for mergers, perhaps acquisitions that will come around the MFBs for them to be healthy enough to serve the Nigerian people. What are those things that your members of your associations are considering if there won't be any shift in date and you still have to keep being in business?
Okay, thank you very much. That's a very valid question. And let me first correct the impression when I said 60%. So I said 60% of the people we have engaged currently seems to have some challenges, not necessarily just with capital, but with issues, clarity around mergers and acquisitions, where clarities around engaging potential. So you can have potential investors, but they're waiting for your audited financials before they take a decision. So it's really not that it's a closed door there. There is no way, but time needs to be allotted to be able to close this. And I like the optimism that JJ has raised that, yes, we're likely, these people are owners of MFBs, are businessmen and women, and they will likely want to achieve that. But again, there's a lot of discussion that we don't want to push at the same time, because if I am serving in a rural area as a businessman, then I want to be able to determine what capital is adequate for me, because then there's also a pressure on return on equity for me. There's a pressure on my investment and the return on my investment. And because, again, these people are businessmen, they can look for alternative ways of putting the same money to yield adequate returns for them. If 2022 is sacrosanct, like you have asked, we definitely need to do what we need to do. Number one, we need to clear the air about the issues of mergers. We're engaging our members. We're educating quite a number of them that it's better for you to have 10% of 100 than to have 1% of nothing. So we're encouraging discussions around mergers. We're encouraging, and we also believe that when you have quite a number of people merging together, coming onto the floor, coming into the market to play, the issue of corporate governance is also further entrenched. The second one is we're reaching out to a few organizations where we also have one of our teams. The association came together and formed the Microfinance Development Company, where debt, capital, and equity is still being put together so that we can help microfinance institutions. I like the discussion on liquidity that JJ mentioned. And you know, my concern has always been, it looks like a catch-22 situation, because the company that needs liquidity badly is a company that is trying to meet up with adequate capital. And if you're not qualified, it's like building an hospital for the elderly. And so we might also need to retweak that and see how we can accommodate the very fragile microfinance institutions. I like the bit of the technical support. I'm aware of the technical support, and I think we need to push that more than ever. There needs to be a lot of intervention in microfinance banks. One of the challenges has been the absolute number of microfinance banks and trying to reach out to every one of them. And so we need a structure that will identify not just with a few, but all of the microfinance banks, and give that technical support and guidance to them. The association is doing its bit at the national and state level and at the zonal levels. And we've had constant discussion with the Central Bank of Nigeria and with the Nigerian Deposit Insurance Corporation. And I'm very hopeful that we should be able to see a lot more results than we envisaged if we roll up our sleeves and take a deep dive into all these issues that have been raised. Thank you.
Taiwo, thank you so very much. Stay positive and stay very hopeful. We want to believe that come the deadline, we'll all smile. But let's come back to JJ in the house. You talked about the concerns that it's not all about liquidity. The issue of corporate governance in the banks is also a huge concern. As a supervisory, as part of the supervisory roles of the NDIC, what are you doing? What can you do in ensuring that these microfinance banks don't fall foul of corporate governance? Or do we wait for them to fall foul and get the banks liquidated before we start stepping in? I'm looking at proactive measures taken by the NDIC as a supervisory role of the NDIC in ensuring that corporate governance is adhered to within the microfinance space.
Thank you very much, Dave. You see, in supervision, we talk about leading indicator and lagging indicators. The lagging indicators is when you now talk about the MPLs. But the leading indicators will be how active is the board and management engaging in a day-to-day process of what they're expected to do as banks. So to that extent, in the risk-based provision that I talked about, we have a rule that says you can be a professor of finance, professor of economics with 20 years banking experience, but that may not translate to effectiveness. So we say effectiveness is a function of characteristics plus performance. So a college professor with 20 years experience will score you 20%. But what you are doing in terms of delivering on the table will give you 80%. So when the examiners move around, look at the books and affairs of the banks, they track this. And the thing that we give any institution out that you are not doing exactly what you are expected to do is how you fare on the MPL rating. Yeah. So to that extent, once that is done, I did tell you that we talked about composite risk rating of these institutions. And the critical driver for the composite risk rating is the performance, especially in areas of asset quality. So once that is done, at the CBN NDIC, we have these kind of institutions, and we engage them by way of inviting them for meetings, giving them timelines to fix X, Y, Z, so that they will be on course as expected. So that's what we are doing. And also, the Financial Reporting Council Code of Corporate Governance have timelines for tenure of directors and board of these institutions. And also that a chairman should not be a member of any of the board committees. To that extent, all this aim at strengthening the corporate governance.
All right, Taiwo, let me bring back this question to you. I know, I want to believe, don't let me say I know because I don't, that you are looking forward to maybe an extension of the deadline of April 2022 for the microfinance banks to get properly capitalized, so to speak, and maybe to carry out whatever will help them to stay afloat in business. If you had your way this morning, what date do you think would be very comfortable for all your members of your association? If the CBN and NDIC are going to listen to you this morning, that you think will be better compared to April 2022 for the recapitalization program?
Thank you very much. I honestly would want to stick to a year or 2 years. The first thing I would want is a phased implementation. And I think the starting point should be, let us aggregate the audited financials, maybe by May, June this year, and see where the capital of every individual MFBs are. And then we can then determine how much work we expect them to put in. Because these are some of the detailed, intelligent discussions and analysis that the regulators looked at before coming up with a position in 2019. Now there's been a deterioration of that capital base between 2019 and 2020 as a result of that pandemic. So there's a new start point. And that new start point, we then ask ourselves and said, with this new start point, what is the capital base for the microfinance banks? How do they move from here? And then we can then fix. It may just require another 6 months. It may require another 2 years. It can be phased. So it is not, I don't have the statistics to determine the number of years that is adequate. Our fears is that for the April that we are in, it is so clear that it's going to be a bit of a challenge. And then the new starting point may just be next year. And said, okay, the effect of the, let me also warn that the effect of the pandemic has not gone. There are a lot of organizations who restructured loans, but then those customers are out of business. They're still not paying on the restructured loan. So it still had the effect with us. So we need to do that analysis and then said, okay, let the start point be April 2022 and let us face it for some other years to see how this will progress. Thank you.
Taiwo, I think it's so well said, even though you were not very straight, but I'm sure the message is passed. The truth is that we need more time. You would need more time in this whole recap program. But still stay with us, Taiwo. I have a question for you, but that will be after we return from this short break we want to go for the moment. So stay with us.
The fight against COVID-19 is far from over. We are presently in the community transmission phase. Unfortunately, this is the most deadly part of its spread, and it's more prevalent in high-density areas. Don't become a statistic. Wash your hands frequently with soap and running water, or use a hand sanitizer, and remember to practice physical distancing at all times and avoid crowded places. But if you have no choice, you have the choice of wearing a face mask. Remember, it's not over till it's really over. This is a message from the Silverbird Group.
For more news stories, kindly visit our website www.silverbirdnews24.com. You can also watch trending news videos on our YouTube channel. We are just a click away on WhatsApp, Instagram, Twitter, and Facebook. Get the news in your palm on your mobile phone by downloading Silverbird News 24 from your Play or App Store. File in your witness report on our website or send an email to silverbirdn24@gmail.com.
Yes, welcome back. If you just joined us, you're still watching News Up, and our conversation is around the state of the economy with greater focus on the operations of the Microfinance Bank. We have the NDIC director here with us, JJ. JJ is here with us. We're also talking with Taiwo on the other side. Taiwo is the chairman of Association of Microfinance Operators in Nigeria, Lagos chapter. Yes, before we went on that break, Taiwo, you did make some clarifications, and I'll probably call it some quiet requests. Yes, quiet requests, which I'm sure the regulators are listening to. But quickly, Taiwo, let me just ask you this. I don't know how you're going to respond to this, but then just try as much as you can. Do you really think that you are being over-regulated?
Okay, so what is regulation? Regulation is expected to bring an intended result. So what are the results? What are the moving KPIs that we want to achieve? And so we have the portfolio at risk, which is the non-performing loan. We have corporate governance, and those things are clearly spelled out. So as it relates to the things that a microfinance institution and actually banking needs to do, I would say the regulation is too much. I will, however, say the space of regulations coming needs to be stemmed. So as a bank, you deal with depositors' money, and they want to be able to extract high level of confidence that our money is safe with you, and the central bank is supporting us. So central bank regulators like NDIC have dual responsibility. One, to the financial institution, and two, to the people who are dealing with the financial institutions. And a balance must be created. And I give them a lot of credit for what they're doing. My concern is not about regulation. My concern will be about the states, about coming up with 3-4 regulations within 3 months, and a lot of financial institutions are grappling to meet up with that. So I think while the regulations are good, the speed of it should be spaced, well spaced, so that you are able to deliver on one before the other. And secondly, let me also say that it is not only the CBN or the NDIC that regulates financial institutions. There are other regulators that comes, and that is where I think our immediate constituency, which is the NDIC and CBN, should be able to engage other government regulators to stem the spate of regulation that's coming out. So you have the Federal Inland Revenue Services. There are about 22 regulatory government regulatory bodies that you report to at one time or the other, and every one of them. So this thing needs to be tidied up. These things need to be controlled, and the CBN needs to be and the NDIC needs to be that organization that will say, look, let all financial regulations come through us. Let us communicate it. Let us ensure that it is done when it should be done, so that we don't have several and different regulations coming from different angles. You're not getting one on VAT, you're getting one on FIRS, you're getting one on withholding tax, and then at the same time you're trying to meet the primary regulator that you're responsible to. So I think for us, it is the overwhelming pack of the regulations that comes up almost every month and at different times from very different angles. That's a bit of a bother to us.
I'm going to stay with you on this particular one. I've been in some areas, rural areas, and I saw a couple of microfinance banks, and I wondered if they were actually registered or were, duly, operating within the legal framework of the country. What is your association doing in this regard? I know that in 2019, the CBN, perhaps of course NDIC, working together to ensure that these the operations of microfinance banks across the nation, among other things that they do, would have considered the rural areas, the unbanked areas and underbanked areas, which are the people who, the areas which the CBN is trying to really pay attention to while calling for recapitalization. What is your association doing in terms of possibility of perhaps finding out if there are illegal microfinance banks around, as well as those that are in rural areas that don't really have as much network as they should, but which are serving the purpose that the people are benefiting from in their domain? What are you doing in this regard to ensure there's safety, there's sanity, and then there are no sharp practices around?
So the first thing is the fact that all microfinance bank must register with the National Association. If you're not registered with the National Association, then you become a suspect. You must register with them. And that much was captured by the regulators in the document that established microfinance banks in Nigeria and regulators, that there must be a member of that body. And earlier on, I mentioned self-regulation and also policing ourselves even before the regulators come in. And so we've had instances of microfinance bank raise alarm about unscrupulous, unregistered fraudsters who will come out in the name of MFIs or MAPs and start operating. And we have taken that initiative to report such unwholesome activity to the regulators to take appropriate steps to stop them from operating. And so we've had a few instances like that, and we encourage our members to do that because, like you rightly said, these unscrupulous elements are the ones that are actually destroying the industry for us and also creating a lot of headache for the regulators to manage. You'll agree with me, with an average of 209 million Nigerians and with the kind of landmass we have, it's going to be a bit of a challenge to do that. But then the appeal is also to the to Nigerians and to prospective customers of such institutions. Now, when an organization promises you a return that sounds too juicy, please don't patronize them. We know the state of the economy today. So if everybody is telling you that is coming up with a pyramid scheme that pays you 100% of what you're investing in 1 month, you should know that that's a lie. Even 50, 20% is a lie in 1 month. And so you need to be careful what you also invest in. And we're also going to create a lot of, we're taking actions on that, where we'll go and educate the public on the activities of microfinance bank. We have a website today, and the Central Bank of Nigeria and NDIC also have a website where you can actually go and look at the name of the microfinance bank you're dealing with, whether it is appropriately registered or not. You can avail yourself of that opportunity. You can come to the National Association of Microfinance Bank Lagos chapter and also go to their website and look at the names of microfinance banks that are registered and that are operating in Lagos. And we're trying to tidy up that register so people can be informed, people can be educated. But the first responsibility is for every one of us to run away for any business that promises you an unreasonable return.
Taiwo, Joda, thank you so very much for your time with us on this segment of the show. We appreciate your time and input, Taiwo. Thank you so very much.
Thank you. Thank you. Nice to have you.
All right, let's coast home with JJ here this morning. Yes, there's this space that we've not talked about. It's a growing space within the financial sector, which is a fintech space, and you understand that so much funds is going around that space right now, and regulated funds, I must say, are going around the fintech space. Are those funds insured, JJ?
Thank you very much, Dave. When you look at the statute setting up NDIC, it provides that the corporation will insure deposits of licensed banks and other deposit-taking institutions. What does that mean? It means for any institution and a deposit therefrom to be insured by the corporation, such an institution must be licensed by the Central Bank of Nigeria. So flowing from that, the big banks, the commercial banks, what we call the deposit money banks, they are licensed by CBN. The microfinance banks are licensed by CBN. Primary mortgage banks are licensed by CBN. Then also in that space, we have what we call money market operators, MMOs, about 17 of them. So their product offering is by way of wallets. So the NDIC insure those that patronize those money market operators that have those wallets to the tune of 500,000. What of the other fintech that are not licensed by CBN? You realize that those fintech, a number of them are licensed by Security and Exchange Commission. And their product offering is investment. They are not deposits. So to that extent, the corporation does not insure those investments. The operative word is NDIC insure deposits from licensed institutions. And Taiwo did make mention of what our teaming public should be wary of. Benenge, the former chair of Federal Reserve of America, says, no matter what you do, you can't legislate against greed. So once I'm seized by greed, anybody is seized by greed, there's nothing one can do to help you. Because a situation whereby, in this kind of environment, somebody is saying, bring your money, I'll give you 15% per month. Where is he going to get the money to give to you? So to that extent, the publicity awareness will be there to continue warning Nigerians, but there's an extent the warning can go, because these people will take their hands, their legs to get to those institutions and patronize them, and they get their fingers bent. There's nothing NDIC CBN can do to help in such situations.
All right, we've been taking a look at the state of the Nigerian economy and entrenching strong regulatory framework in the country. And we'll be speaking with the Director, Special Insured Institutions Department of the Nigerian Deposit Insurance Corporation, NDIC, Joshua James Etopidio, call him JJ. JJ, we want to thank you so much for being part of News Hub today. I'm sure that the people would like to talk to you, speak to you via social media handles to ask more questions, David.
Yes, I'm
Thank you.
pretty sure they will want to stay. Of course, you can always reach JJ. He's a director with the NDIC. Just go to the NDIC website. I'm sure there's a portal where you can reach JJ out on there. But then I'm excited at the few establishments that we've recorded today. JJ has come to tell Nigerians that your monies are safe, the banks are safe, and then for those customers of liquidated 42 microfinance banks, pretty soon you would hear, you get to hear from the NDIC as to when you can begin to recover your monies. And that's it. That's a beautiful conversation we've had this morning on this segment. That's where we say thank you once again, JJ. Thank you so very much, and we'll take a break. When we come back, it will be time for our next conversation. You can't wait. Just wait for this conversation. You would love to be a part of this next line of conversation. It's around state of the Nigerian Union. Yes, state of the Nigerian Union. So stay with us. We'll be right back.
Thank you, Dave.